We're rolling.
Welcome to the REI Rookies Podcast.
The Real Estate Investing Rookies Podcast, episode number 13, where we invite you to follow us on our journey towards financial freedom using the power of real estate. I'm Josh Koth.
And I'm Jack Haas.
And here at REI Rookies, we believe in a couple key principles. Number one, the best way to retain information is by teaching it to others. And number two, a rising tide lifts all boats. We're not competitors, we're a community. So let's get into some real estate investing.
So we're going to continue our series on acquisition strategies, and just kind of a recap of what those are. We had number one is the MLS. We covered in last episode, and you should check that out. Number two is FSBO, for sale by owners. Direct mail, bandit signs. Direct referrals, networking, and drive-bys. And so today we're going to focus on acquisition strategy number two. For sale by owner.
All right, so an FSBO, a FSBO, as we say, is a for sale by owner. So basically what that means is they've elected to try to sell the property themselves, not using a real estate agent of any kind. So, and just so you understand what percentage of the market this is, typically 89% of homes are sold through an agent, and only 8% are sold for sale by owner or via the FSBO route. 3% are other, like purchased by a house buying company or some other method. But so only 8% are FSBOs. So it's really a smaller niche of people. And in my mind, it requires a different approach because these FSBO sellers can be kind of a unique people. Right, Jack?
Yeah, and they usually are looking to wring out every penny in that property. So they're typically selling it themselves in order to, for example, save on the broker fees.
Yep. They look at that. Let's say you have a property, you think is worth about $100,000. And they think, well, why am I going to give $6,000 to some guy, so I can keep that, put it in my own pocket, right? One thing that they don't really realize, though, is that agents typically will help your home sell for a higher price ultimately and usually quicker. And that's just due to the exposure that a house will receive when it's listed with an agency. The FSBOs typically don't have the same amount of marketing power behind them and the same amount of exposure. So a lot of times they'll sit on the market longer and end up selling for a lower price anyways. So that $6,000 that they think they're saving, typically they end up giving it up on the back end, either through longer carrying times or a reduced purchase price due to lack of exposure and less offers coming in.
However, they are a good candidate for things such as seller financing, where you're buying it and going into the deal and finding an opportunity where you can control the terms versus the sale price.
Yeah, so basically, if someone is selling a home for sale by owner, chances are they probably have some equity in that property, so that gives them the ability to do a deal. And like you said, maybe a good candidate for seller financing. Maybe you can buy the property in terms, a little money, some money down, and some money over time. Maybe they don't need a big chunk of cash all at once, right? So it's definitely something to keep in mind when you're approaching FSBO owners. So let's get into how do you find a FSBO? Where do they appear? Where can you look?
Well, we've been finding a lot of people will post on Craigslist. That's the number one place for anything to sell individually these days. So we personally use If This Then That, IFTT. We have an applet that will run on a daily basis that sends us details on those properties for those for sale by owners.
Yep, so that's a great way to not have to sit there and comb through the listings every day. You can also look on Zillow, Realtor.com, all those other realtor type sites, because you can list for sale by owners on those sites as well. And that's if the owner is savvy enough to set those up. Now, honestly, driving around is another great way, and this is how we've found a few properties to call and at least look through. I don't think we've done any deals directly through this route, but a lot of times remember the mindset of a FSBO seller is they're trying to save money. They're trying to wring every last dollar out of this property. Sometimes they go so cheap, they don't even have a proper sign out in the yard. I mean, they go one level below, a rummage sale sign. That's how cheap they can be sometimes. I've driven by just one the other day. I saw it was like, a piece of paper taped to a stick, and it had the phone number. It's like, really, you can't spend $8 and buy a proper rummage sale, or for sale sign to, with some nice wires and stakes to put in your yard. That's actually, you can read it from a car when you're driving by. And that gives you a little glimpse into the mindset of some FSBO sellers. They're not willing to spend any money marketing this property. They just think, well, things are selling. It's a hot market where we live right now. They're thinking things are selling so quickly. I don't need an agent to market this. I just throw my number out and it's going to sell like hotcakes. And they'll be beating down my door with offers, right?
Yeah, and this is one of those things that is the importance of your networking team. We talked previously about joining your local master networks or your RIA or what have you. You're not going to be able to drive by every street in your city to find these FSBO signs. But if you have your networking team available to you, you mention that in your group as part of your asks. Have somebody notify you if they do see a sign, and then it allows you to follow up and expand your reach.
Yeah, that's a great tip. We've actually had quite a few tips come in that way. And another, tip you hear quite often is to just take different routes around the city. I've found one FSBO because it happens to be right by where we have our P.O. box. So I drove by it every day, the same route. And so I started actually taking different routes, and I found a few more that that weren't listed on Craigslist, weren't listed on Zillow or anything else. Literally, if you didn't drive by and see that sign, you were not going to have a chance of buying that property. Think about how that limits the exposure, the marketing that property gets. I mean, they're really reducing their chances of getting that house sold by literally just having a small sign in the yard, and that's all they're doing. So, I mean, you have to put forth some effort to even find these properties. So I don't know how they're expecting, to sell them quickly using this route. And that is one thing. FSBOs take 19 days longer to sell. So that's something to keep in mind, too. These owners may be a little more willing to deal if the property's been sitting there a little bit, right?
Yeah, we just want to make sure that we might be sounding a little repetitive on a few things, but we want to make sure we recap the things to keep in mind when you are looking at one of these houses. So, for example, again, make sure you have your formulas in place. You're going to be talking to these owners directly, and there might be some emotional attachment to these properties, but you really have to stick to your numbers.
Yeah, because remember, this is a different negotiation than it is between real estate agents. When we submit offers on the MLS, our agent is talking to the listing agent. There's literally no emotion involved there. But when you're making an offer on a FSBO, you're talking to the owner of the house. They may have lived there for 30 or 40 years, and they think that house is worth more than it is. And, they're going to have some emotion involved if you're lowballing them or what in their minds is a insulting lowball offer. And you're just running your numbers and you're going to offer the price that's profitable to you as a buyer. But they're going to think that that's insulting, and you just have to present it to them. I don't see a path to profit anywhere above this number. And actually, I just did that today. I was talking to a gentleman, and he had a certain price in mind, what he thought it was worth. And I said, well, based on what it can rent for and what we think we can sell it for, what the market is bringing, here's what we can pay. And I said, I don't see a way to generate a profit for us any other way. And, we were about 20 grand apart in price. And really that was what our profit would have been. So, if we're willing to sacrifice all our profit, we could have purchased the property, but that kind of defeats the purpose, doesn't it?
Yeah, and on top of that, along with the pricing, you got to know that neighborhood, run those comps, and find out those rent ceilings.
Yep, we have 3 big colleges here in our metropolitan area, Fargo, North Dakota here. So, there's lots of different pockets of what things will rent for, how quickly they'll rent, and what you can sell things for in the retail market as well. So it's again, really important to know those numbers. And, getting back to the emotion that the sellers may have, not only are they attached to the property and not wanting to see it get purchased at a super low price, they may be listing the house at an unrealistically high price too, which may be over what the comps in the neighborhood and the market in the neighborhood will support. So you really have to go in there knowing confidently your numbers. And if they say, well, I believe this house is worth $120,000, and you can show them, well, look, 3 other similar houses sold in the last few weeks for $80,000, $85,000, $90,000, somewhere much lower, and with similar features and square footage and all the other, if they're true comps, it's pretty hard for them to justify that much of a price increase based on the fact that they just love the house. So you have to, again, be an offer bot, be a robot, keep emotions out of it, just show them the facts, and they can go ahead and be mad about it. But, you can justify your numbers by having some really solid comps. So that's very important.
Yeah, and a lot of the stuff that they may not take into account is the house might be in great shape. It's something that they've really grown attached to, but it hasn't been updated since the 1970s. They don't take into account what type of rehab might even be needed to make it market ready.
Yep. So, just like every other property, when you walk through it, you have to be able to quickly determine the amount of money you're going to have to spend to flip it or keep it as a rental, and be able to run those numbers very quickly. So, okay, so moving on, another, making your offers as attractive as possible to a FSBO seller is a really important point, because, they may not be as educated of a seller as some others, because they don't have a real estate agent guiding them through the process. That's really the value of what a listing agent does, is shepherd the seller throughout the whole process. So a FSBO seller won't have that luxury. They don't have someone guiding them. So we're as a buyer, when we're making offers to them, we're counting on them understanding what's happening here. So it might require some more education on your part of the seller, which is fine. And, we've done this many times, so we have no problem telling them all the steps that need to happen and walking them through the process ourselves. So some ways we can make the offer more attractive is, all cash, typically, no inspection, as quick of close as possible, especially if the property's vacant. And a couple other things you might want to do is offer to bring in a title company and take care of all those arrangements, right? So if you can make it so all they have to do is sign and get a check, that's about as attractive as offers you can get. And speaking of signing, if you can find a way to do electronic signing, if they're, technically savvy and can do email and things, you can use DocuSign, something similar to that. Or if they're not, caught up with the times, they don't have that ability, make it so you'll print out the documents and bring them to them. You want to make it as easy as possible, because, you're trading that. On the flip side of that is you're getting the deal, but you want to make it as easy for them to say yes as possible.
So there's a few things to keep in mind as you're working with and talking to these FSBO owners. But we'll move into the lesson of the week, and it's best practices around talking to sellers.
All right, so for our real estate investing specific tip of the week, when you're speaking to sellers, you want to prioritize the methods you're using in this order. Number 1 being in person. If you can talk to them in person, that's going to be the most effective negotiator that you are. So you always want to have that be your medium of choice, in person. So even if, I'm on the phone and that's going well, I always try to set up a meeting. First of all, you want to see the house anyways. They're going to have to let you in. They're the owner. They're the seller. So it's a great opportunity to meet them in person, build some rapport, get them to, understand that you're not there to steal their property. You're of course you're looking to make a profit, like all investors are, and all people are really that are purchasing property. And that's a great way to build some rapport quickly. And there's no quicker way to do it than in person. So you want to use that as your main method of contact whenever possible. Number 2 would be on the phone. Okay. That's a close second. A lot of times we'll speak to sellers that are from out of town. They own properties in our town, Well, it might be hard to meet them in person. I still try though. And typically they'll be coming into town at some point. So if you can meet them at the property, somebody's going to have to let you in, right? So if you can meet them in person, try to upgrade it to that higher priority method of communication in person. So, but on phone is a close second, and email or text or any type of, communication like that would be the least effective way of communicating with FSBO owners. So you'd want to minimize that. If you get an email or a text, you want to try to upgrade them to the phone or in-person methods of communication as quickly as possible.
I think that's a pretty important piece. That emailing or texting, we really try to use that to drive the phone conversation or meeting in person. That's really how we're trying to leverage any email or texting. You really want that personal touch.
Exactly.
They're far more likely to sell to you if they like you.
Yeah, and that's so true. And if you're not a likable person, you could lose a deal, even if they want to get rid of the properties. There's been times where, I've heard people just said, well, I just didn't like them, so I just, killed the deal. That's happened. So you can influence their attitude either way. So if you're good at negotiating, which you should be if you're a real estate investor, that's one of your main skills you need to have. And a large part of that is building rapport with other people. So you have to be able to talk to and negotiate with sellers and build up some rapport quickly. So that's the best way to do it, in person, always first.
On to the Coach's Corner, personal development tip or book or quote of the week. We are going to be recommending The Richest Man in Babylon by George S. Clason.
Now let me ask you this. How did you first hear about this book?
It's one of those books that have been on the radar for a long time, and it's been in my Audible library for I don't even know how long. And I was on the lawnmower this weekend. As you know, I have a very large lawn, and it takes me half a day. And I was able to consume this entire book in a lawn mowing.
Now, what were your main takeaways when you listen to this book? I'm interested because I have a little story that I'll tell after you finish yours. But what were your main takeaways after reading the book in your mid 40s, actually having done some real estate investing, and had other retirement accounts and things for quite a few years? What's your main takeaways from the book?
Well, I think that's interesting you say it that way, because if I would have listened to this audiobook like 5 years ago, I would have taken it one way, and now I take it completely differently.
Would you have thought it was mainly for building money in the stock market in your retirement accounts?
Yeah, returns on investment.
Using compound interest, the power of compound interest.
Right. And there is parts of that where they definitely emphasize that piece in some of these Babylon tales or principles. But what I really took it this time is that entire concept regarding real estate in making sure your money is working for you.
Right.
And making sure that you're doing it in the best, most impactful way possible.
Yep.
So it really, for me, listening to it now, it really reinforced that we're on the right track.
Yep. And I have a completely opposite story. When I first found this book, this is actually the book that got me into investing at all. Not real estate investing, just investing of any kind. I believe I was like 23, 24 years old, and I knew I had to be putting money away somewhere, somehow. You should be saving for your future, right? And I had no clue how to do that. Didn't have an excess of money by any means. But I read this book, and it was basically the power of compounding is kind of what it really demonstrates, right? And if you have your money working for you, it can grow itself. So that's actually what got me into, researching stocks, mutual funds, all the things, and set me down that path of investing. But yeah, it's funny that now as a real estate investor, it's a completely different ball game. And really, you just want your money to be working for you in the most productive way. And, we can argue that real estate's the most effective method to do that. Other people may have differing opinions. But as real estate investors, we believe real estate's the best vehicle for that money to be generating more of itself. So great book, though, and it's a pretty quick read or listen. And, investors of all stages and ages should definitely consume that book.
Yeah, and right now it just happens that I checked Amazon today. The Kindle book is only $2 and the audiobook's only $3.
Yep, exactly.
So really inexpensive and well worth the time.
Exactly. All right. Well, definitely we'd love to hear some feedback. Do you guys have any questions? What do you think of the podcast? Would you like any topics discussed that we haven't covered yet? Definitely look us up on Facebook or Twitter at REI Rookies, and head over to iTunes, subscribe, rate, and review the podcast. It really helps us find other rookie investors, and they can find some hopefully useful information out of us.
And remember, get off the bench
and get into the game. We'll see you next time. All right, so for sale by owner, that's an acronym standing, which means for sale by owner. So
you gotta. You said for sale by owner is a.
Oh yeah.
I don't even know what the thing's called, and we just wanted to take a minute to talking best practices. We're gonna have to edit that little bit.